look at last week's figures, I mean, week-on-week turnover rose to 753 million shillings, while the NSE shaved off a total of around about 84 points. This week, we've had the market slipping back day after day yet again. What do you see acting as a catalyst for recovery in this market?
Well, it's very difficult to say that. If you look at the earnings for most of the companies which have been reporting, they've generally been disappointing and below market expectation. This year, the turnover was basically buoyed by a lot of activity on East African breweries, where foreign investors were basically trading on the counter. So it's really difficult to say that you're going to see an upturn in the market in the coming weeks, unless earnings start, to come in an encouraging way. And in the short run, I think we think that's unlikely.
Well, Eric, I'm not sure if you changed your surname of late, but I am used to knowing you as Eric Kimanti, so sorry for that misintroduction there. It seems that we got...
that's good. That's okay.
Well, in the meantime...
all are my names.
Well, in the meantime, we're looking at inflows coming from foreign investors in the equity space specifically. They're continuing to mop up shares in the usual suspects. We've got Safaricom, Athi River Mining, BAT and East African Brewery shares as well. Is this still purely because these are the most liquid stocks on the market, or are there other factors driving interest here?
I think you've just hit the nail on the head. Basically, liquidity plays a key role in this market. And when foreign investors or generally local institutional investors are taking positions, these are the counters they tend to look at. But then again, we also have the year-ends coming up for most of these companies, and also the first half results, which are usually landmark, and people tend to take position just before and after the results are announced.
Let's take a look at East African Brewery's numbers. I mean, we've been anticipating these numbers for a long while yet. Have you had a chance to actually analyze them?
Yeah, I was just in the investor briefing today, and basically the sales were up 6%, but the volumes were down 4%. If you look at what really affected the sales, you mentioned earlier there, the demand really came down. We had a lot taxation going up for most of the products. On barley, we had barley and malted products about 70% tax increase, and for the spirits going up about 250%. And for the spirits division, that was quite significant because we saw a 33% decline in the volumes consumed. And then, of course, we had the cost of barley. They imported 40% of their requirements this year, and that was a very significant increase. Importing is quite expensive compared to sourcing locally. And of course, electricity costs were also up.
Well, with costs being a very big pressure point for the company at this stage of the game, I mean, we saw in March, Eric, the company announcing that it's planning on cutting an unspecified number of jobs because of lower sales and rising costs. Was any mention made of that and what we can expect moving forward on that front?
Yes, they had a one-off charge of 558 million relating to the reorganization cost, and so that relates to the one-off expense, basically that involved laying off some staff.